Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking crude oil, that below 64 low that we saw yesterday so far is holding. We got a little bit of a rally in oil in the overnight session, and then it got hit pretty hard as the tariff escalation continued. Tariffs not only hitting growth expectations for the economy, which will hit all commodities. It will not just hit crude, will not just hit base metals. It hits all commodities when growth projections go down. And we had President Trump address the Commerce Department asking him to look for $200 billion more in tariffs, and if China retaliates to those, find another $200 billion on that. So that'd be a total of about $450 billion in goods on U.S. Imports from China. And we only do about $500 billion, so that would essentially be every product. So tariffs hitting the growth expectations as well as the retaliatory tariffs that China has put in place already that go into effect July 6th are taxing WTI. That's West Texas Intermediate crude, which is U.S. crude oil, and it got hit a lot more today than Brent did. WTI down over 1.5%, almost 2% on its lows, while Brent was only down marginally, a little bit more than 0.25%. So the spread widening again. I've talked about the spread before. It's very important because it brings about demand for WTI because of the transport cost. But China, being one of the largest importers of our crude oil into their country, when a tariff is added to that, it now takes away that excess capital you could use for the transport from the point of origin to the ports to get it to China. So it's hitting WTI much more, that particular Chinese tariff on energy. Now the dollar is another reason. Again, as I mentioned, the tariffs are causing the dollar to rally, and that flight to safety is again going to cause commodities to fall. When the dollar strengthens, all else equal, commodities will be lower. I keep saying that because it's a very important thing to take home with you, that the dollar globally controls the price of commodities if nothing else is going on. Now, obviously, there's other things going on, but those things are causing the dollar to strengthen. So that particular relationship stays intact. And then we're still cautious as we await OPEC. The OPEC meeting still going on. Decision on production increase expected to be tomorrow, which would be Wednesday or Thursday. We don't know exactly what it's going to be or when it's going to come out, but more importantly, is there going to be an agreement for Russia to either formally or informally join OPEC? And is there going to be an implementation plan that either floods the market with this increase or gradually builds it up? That will decide on where price should be as well. So we've seen a lot of the open interest on the long side just completely dissipate. We're still in a correction mode in terms of price versus the high in WTI, but it could break down at any point and turn into bear market. We'll probably be waiting for OPEC for that. OPEC is definitely going to take the current situation with tariffs and potentially reduce demand from those tariffs into play as they increase production. So I'm starting to think they're going to lean a little bit more to a lower production increase. That could show the bottom of WTI if that happens. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.